Mortgage protection mailers or digital leads, what's actually the best? Let's break down the numbers. In this video, I'm going to be showing you exactly how you can distinguish what lead type you should be using if you're a mortgage protection agent, especially in the digital world. I feel like it gets a lot of slack. My name is Trey. I'm the owner of Agent Lead Lab. In the past 3.5 years, we've helped 550 agents issue pay $40,000 per month. And on this video, all I try to do is walk through behaviors, principles, and tactics that these agents are using. We make no income claims that I can guarantee that you will make $40,000 a month, but this is necessarily just a blueprint and strategy of what other people are doing to help them hit $40,000 a month. As always, please make sure that you like, comment, and subscribe. And let's hop right in. First things first, I had somebody ask me the other day on a call, they were saying, when you say $40,000 a month, what do you mean? Annual premium, commission payouts? So when I say issue paid, that just means commission, what they got paid out. So for some carriers, for some companies, that could be 50, 60, 70,000. For others, it could be, they're getting paid as earned. There's a lot of different ways that you can kind of skin the cat. But nonetheless, when I talk about that, I'm talking about commission, what they get paid out. Now, the common misconception, right? And this is kind of the backstory of, hitting $40,000 a month, hitting $50,000 a month, shoot, even hitting $20,000 a month, is that, every single person is trying to get the least amount of leads, to spend the least amount of money, to make the most. And while in some ways I understand why you want to do that, the model of spinning your wheels all day, all night, dialing for 12 hours straight, forever is not sustainable. And unless you plan on building a massive, massive team, which some people do, it's not for everybody though, it is going to lead to burnout. The amount of agents and agency owners I've seen over the past 5 years of just being an agent and almost 4 years of doing this is insane, right? It's the number of people that don't stick to things, but also just get absolutely burnt out. And I have to preface that by saying, if you're getting into doing mortgage protection in any sort of way, shape, or form, it is typically the most least cost-effective lead type to run. I'll be honest, because you're paying for a premium experience. It is, in my opinion, outside of annuity, the best natural lead type for an agent, right? And I'm going to explain why. I have in multiple videos the demographic behaviors. And the demographic behaviors of homeowners is the highest. And you're like, why? It's like, because if you were to ask, what is the ideal person, no matter if you're doing any lead type, you would say that somebody is married, that they have consistent income, that they have a loan or mortgage, so they have assets, right? And more likely that they are building something, or they are retired with money. Now, if they're building something, they're probably what? In their 20 to, late 50s. Okay? So if they're retired, they're probably in their 60 to 75. Now, most people are like, I don't want to deal with homeowners that are retired because that means they can't get term. You don't understand mortgage protection at all. If you think that term is the only thing you can sell a homeowner with mortgage protection, that's wrong. Somebody lied to you and told you that term was what you sold when you sold mortgage protection. You don't really even sell term at all most of the time. Typically, you're selling a whole life policy or an IUL most of the times when you're selling mortgage protection. You are not just slinging term. If you think that that is true, then you will not do successful in any lead type, whether it's digital or it's mailers, because you already think that the way to solve their problem is to just give them a term. It's like somebody saying, I'm buying IUL leads, and people want retirement, and the only way to sell them retirement is to do an IUL. That is also false. You are not actually leading the people in the right way. Instead of being a problem solver, you are a product solver. You're saying that this product will solve the problem. That's not correct. You figure out what the problem is, and then you find a solution through whatever product is necessary. Yes, you're like, well, Trey, it's the same thing. No, it's not. You're going into it saying, I'm just going to give them a product to automatically solve the problem that I presume that they have. Rather than I'm going to ask them the questions that figure out what the problem is to figure out how to solve it by giving them the right product. It's a frame. It's a tonality. It's, oh, I already know what you need, so just buy it. And they're like, well, you don't know what I need, and that doesn't work for me, and that doesn't make sense, so I don't want it. Buy. And then you have people that get upset about leads. Oh, these don't work, blah, blah, blah. Then you have other people who come in and they say, hey, what's the problem? You filled this out. What's the main struggle? What are you concerned about when you pass? Obviously, it's your loan. Duh. It's like, well, I'll just sign them up for a loan. Well, they don't close. Well, that's because you don't actually have something that you're solving for. You're just giving them a product to say, hey, here's the product. It's going to solve your problem. That's wrong. That's like going to a homeowner and saying, you need to get whole life. Why would I get whole life? You don't actually explain what their problem is, what are they trying to solve for, and how your product can bridge the gap. It's like anything in sales. The problem in life insurance is that it's so simple to get into. It's so simple to make money that people mistake simple with easy, right? And they think that, oh, well, because it's simple, it should be extremely easy. And that's not true. Just because it's simple doesn't mean it's easy. It just means it's simple, right? In order to sell at a consistent level, to make income, and to not run into chargebacks and not be very underwhelmed with the process of life insurance, you have to understand the difficult aspect of going through the learning curve, which is why a lot of people struggle with doing mortgage protection in general. Definitely doesn't have anything to do with the innate, whether you should do mailers or you should do virtual. Now, here's the thing that I'm here to break down. The actual numbers, okay? So this is just like, that's my thought on mortgage protection, because it had the most ideal demographic. If you were to look at any billionaire, they would fit in some of these categories. They'd probably be married, they'd probably have consistent income, they'd have a loan or a mortgage and assets, and they'd be in one of these phases. Now you have some people who are builders that are later in them being older. That's when you're really going to run into your ultra wealthy people. Those are going to be the people that fit into annuities. Kind of see what I'm saying? But they're in the mortgage protection. The thing is that when you go for mortgage protection, you're going for homeowners. When you go for annuity or IUL or whatever, you're calling out to what they think they need. A better way to do it, like if I was an agent, what I would do is and this is what I tell some of my people that can do it, is I would actually target homeowners, but then create the problem around what the homeowners need and then solve it by giving them an annuity. Rather than telling them, hey, if you have an annuity, if you're looking for this, if you're looking for that, yeah, you'll have people that fill out, but you'll get more leads, better quality, and you'll tap into a different market. If you're just pushing annuity and everybody else is running ads that's pushing annuity, then all you're going to get is people that want annuity. But if you're pushing a problem and then you push a solution and you target a demographic, that's when you get really, really, really high intent. And that's what we focus on with our leads when we create them. Because instead of just saying, well, cool, you just want this, it's like, yeah, you can do that if you want to be super direct. There's no real problem. Or you could find those same people and then present to them a solution. That's why people struggle with the whole tax-free retirement. They think that they have to come in and sell tax-free retirement and be a financial advisor or be this. No, you just have to be a person that can solve problems and understand client demographics. When you understand that, then you solve problems and you give them the right vehicle, whether that's term, whole life, IUL, UL, doesn't matter, right? But then now you're just solving a problem. Hey, here's kind of the picture I'm painting. That's what they're paying you for. Now, when I think about it, if I was going to just go online and get a quote for term, that's why a lot of people don't convert. People struggle with mortgage protection because they're like, well, these people aren't converting. Yeah, because you sound like something they could go get online. So why would they? I wouldn't give somebody my information over the phone if I could come up with the answer on my own. Well, you're telling me I just got to get a term to cover my loan? Yeah. Why would I fill out an ad to do that? I could go to State Farm. I could go anywhere else. There's tons I could literally walk down the street and get somebody to do it. No, what they're paying you for is you should be the advisor that can paint a picture for them to solve them. That's the difference between all sales. That's the difference between a really good agent and a really bad agent. That's why digital leads and mortgage protection, it doesn't matter where you go, you're not going to overcome that. Now, the reason why I think both of these get a bad rap, and to me, honestly, I think they're great. I have nothing wrong with mailers. Trust me, a part of me is like, I kind of want to open up a mail house and start shipping mail out myself because I feel like I would do way better than the way that they advertise the mail, like the ideas that I have. And it's been something that's been in my mind. Like, if we can come up with mailers, it'd be over, right? As long as you can get a better return. I think the return is not just the fact that people don't open their mail. People still open their mail, but it's the way you can convert those people. Mail returns being that low is a conversion mechanism problem. It's always that. It's like, well, yeah, they don't convert. It's like, well, then the question is like, how many people open their mail? It's like, there's still probably a good amount of people that open mail. People just aren't not opening mail. Mail's not going anywhere innately. Yes, there's more digital things, paperless, but at the end of the day, mail's not really going anywhere. So if it's not really going anywhere, then the question you have to ask yourself is like, what am I trying to get my conversion rate to actually be at? Because if that's the case, just trying to take a quick note. If you're finding that demographic, then it's just how to convert them. Now, I want to talk about the difference between mailers and digital leads. I'm sorry I went on that quick tangent. So for those that bear with me, I just wanted to explain to the people who want to know or understand why that is. Okay, so let's talk about this. So let's just use mailers. I'm going to use standard like mailer numbers, and these can fluctuate. So it's like you just kind of look at what you're doing. We're just going to look at price dynamics. I'm not going to go into like returns. Let's just go averages. So mailers, for everybody that knows, can range anywhere between 70 to like 100. I've seen like, let's just do 70 to 100. I'm not even going to talk about the ones that are upwards of that. Okay. In terms of how many mailers you have to get, okay, that's typically like what, and I feel like $70 is kind of low. I've been seeing a lot of places where it's like 80 to about $120. So we're just going to use 80 to $120. But to be precise, the median range between 80, let's just call it $90 on average for a mailer across the country, right? And honestly, somebody could cross-check me. The only reason I'm bringing this up context is I heard a gentleman, I won't drop his name, that was talking about him crushing it in mailers, which I love it. But I heard him say he's dropping $5,000 a week. Sorry, $3,000 to $4,000 a week. I apologize. And I was like, dang, if you put $3,000 to $4,000 a week into leads or into ads, text verified, OTP, qualified leads, you would probably get a much better return. But that's just me. But let's look through the numbers because I haven't even done the numbers. We're just going to do it together because we'll see. We shall see. So let's say it's $90 average, right? And let's do two analogies. No, let's just do mine because I probably think we have the most expensive mortgage protection leads on the market. Digital mortgage lead. Okay, so let's just do some numbers. All right. So with a mailer, there are a few things that you must be aware of. Okay. So let's just say that, and I'm a big cost to acquire a client. Now, this guy said he was spending, let's just call it $3,000 divided by 90. Okay. So he's getting 33 leads. Oh, that's not even a lot. I mean, he might be getting more than that because he said he gets about 30 leads a week and he books like, yeah, that's about right. Yeah, that's probably about right because he's saying he get about 30 leads a week. So we'll just go 30 leads, okay, for a $3,000 investment. Okay, so it's $100 a lead. Okay, so then out of those 30 leads, he said he books 20 appointments. And then he closes, I think he said like 13 or something like that. But it doesn't even matter. The good thing is he's making $20,000 a week. Okay, he's putting in $3,000 in ads and in leads, and he's making about $20,000 a week. That's what he said, right? So regardless of the booked appointments, stuff like that, we're just going to go with the bottom line numbers. Okay, paid commissions. All right. So on average, what that means, if he's doing 20,000 and he's putting in $3,000, that means he's my bad, 20,000. So he's profiting about $17,000. 17,000 profit. That's after his lead spend. That's actually really, really good, right? Now, regardless of how many leads, stuff like that, I'm assuming, let's just say on the worst end, right, he's getting about 30 qualified leads. Say he's booking like 20 appointments, something like that. Doesn't even really matter. It's just how much he's spending. Now, if you were to take 3,000 and divide it by 55, you'd be getting 55 leads, right? If you did it this way. So with 55 leads, okay, and I'm just going to use 30 because I'm almost positive he said he got 35 leads. So we're just going to go with 30 leads. It's important. So you're going to get 55 leads here. You spent $3,000, right? Now, let's just say that his cost to acquire a client, spent 20,000, and he closed 20. So he spent 20,000 and he closed 20. So his cost per sale was about $1,000. Then his cost to acquire a client was $1,000. Because that's how, he closed 20 clients at $20K. So his cost to get a client just is about $1,000. I think that's extremely high. Now, he may be saying that those numbers are great. I feel like even if he had, to me, it's like you're getting 20,000 even if you were closing 60 clients a week, it's like that's 330. That's 333. No, that can't be right. Hold on for a second. 20,000 divided by. That's how you know it's live, y'all. Too. I just do everything in front of y'all. So if he had $20,000 that he collected, he divided that by. No, because he wouldn't have closed 60 clients. If he's closing 20 clients, that's $1,000 per sale, right? So 20K commission. And the reason why I'm doing these numbers is I want to see what it is. Let's just say that 20K commission, he closed 20 clients at an average AP or IP of $1,000. Okay. So that's how much it is. It cost him $1,000 is the cost to acquire a client. Yeah, every time he puts $1,000 in, he makes $1,000. No, I'm sorry. Yeah, I'm tripping. He put $3,000 and he got 20 clients. There we go. So 3,000 divided by 20. There we go. I'm so tripping. So his cost to acquire a client is about $150. That's what he's saying. So at $150, the cost to acquire a client. Now, I'm not 100% sure that that's correct because that would literally mean that every lead he had, he closed. So a little bit more realistic sense is like if you're spending 20 grand, if you're spending only 3 grand a week in leads, right? I think that you're probably going to be like, just being honest, unless his lead cost is like super, super low. But if these are the numbers, by far, before we break anything down, this wins. And I totally get it. Here's the point I'm trying to get at. And I'm not defending digital or mailers, by the way. This isn't to say like, I'm like, whoa, dude, this guy's crushing it. If this is the truth, if this is actually his numbers, which it sounds like it is, why would you ever change that? They're basically saying that he's probably paying less than that. He's probably paying $70 a lead, I'm assuming, because if that's the case, he's not spending $100. That just wouldn't make sense. He's probably getting more deals like leads than that. $70 a lead times 3K, so 3,000 divided by 70. Yeah, he's getting like 42 leads, and then he's closing about half of the leads that he gets in. Yeah, I mean, that would make sense. And he's also closing for $1,000 per deal. That would also make sense too. Now, here's the thing. Per these numbers being correct to any capacity, if he spent $150 cost to acquire a client, then yeah, I mean, that makes sense. I would do that every day of the week, 3 times on Sunday. So it's like, okay, cool. Now, if you're not somebody that does that, which I don't know many people that are closing at that clip or it's not even regardless of the lead, that's a really high closing percentage. That's literally every 2 deals. That's almost 50% across the board of total number of leads, not like booked appointments. That's total number of leads. But if you don't have that situation and you can do something like a mortgage lead that's digital, if you put $3,000 into $55 leads, right? That's 54 leads, 55 leads. Okay. Now our average cost to acquire a client on the digital side is $350, right? So basically you're looking at, let's take, 3,000 divided by 350. That's going to be 8.5 sales, right? So let's just call it 9 sales just to round up. And then at that point, you're going to say our average AP is about 1,800 to 3 grand. Okay, so let's do the average of that. 1,800 plus 3,000 divided by 2. 2,400. Okay, so 2,400 is the average AP per close. 2,400 times 9 equals 21.6. So even at this rate, 21,600, you are actually still making money doing this model with a higher cost to acquire a client because you're closing at a higher clip. So, that's just what I'm saying. Now, this is going to be an annual premium, so the issue pay payout is going to be less, which is probably where he's getting his numbers from, which makes sense. He's probably writing more than that, but his commission might be a little bit lower because he did say that he owns his book of business, etc. So he's probably not at a company where they're paying like 110, right? So a lot of our people are. So once again, his model still makes sense. And honestly, even if his leads are like that, it would be better to take whatever you're doing with your skill set, improve your skill set, and run his lead model. Now, the reason why I'm saying that is that the purpose of this whole video is not to tell you that like my leads are great, because like to each his own, or that those leads are better or worse. It was to compare two models. It's oftentimes question of like, mailers are way better, but you have to break down the numbers. It's not about saying they're better because more people, whatever, and people fill stuff out. Yes, 100%. The question is, which model gets you the lower cost to acquire a client? Yeah, if I'm spending $100 on a lead or $80 on a lead, and it still takes me 4 or 5 leads to make a sale, then I mean, if it's 80 times 5, that's $400, right? If for every 5 leads, if I make a sale, that's still $400 cost to acquire a client. That's still higher than what ours would be, right? And then the next question is, what is your annual premium of the leads, right? Now that comes down to the skill and the payout, right? So it's like, how do you position that? Well, if your average AP is like low, then I mean, it doesn't really matter like what it is, because you could have a low cost to acquire a client. If you're not making a lot of money per clip, then what difference does it make in the long run? So that's how I try to explain it. So that way we're kind of on the same page. But I think unless you know your numbers, then it doesn't matter. So even me, and I've done this live a few times, you guys have seen me mess up. I'm not the greatest at understanding these numbers. I just started tracking them myself, to be transparent, within the past 2 or 3 months with my mentor. So I'm starting to understand why this is so important, because then you make decisions based off numbers. Like we're scaling. So I'm trying all sorts of different things out and we're spending money, and that's okay. But I'm learning. So I'm figuring out like, okay, this doesn't work based on these numbers. Here's what we're looking at in terms of return. If we can figure this out, then we can figure the next step out. But you have to understand, when you're comparing leads, you have to look at the numbers. Most people just make decisions off of whatever. It's like, yeah, I spent $2,500, right? And I made 5 closes. It's like, okay, that's actually pretty good. Relatively speaking, it's like 2,500 divided by 5 is $500. Now the question is $500 cost to acquire a client worth your time? Because if you could spend $800 and you close 3 clients, then it's like, it's $266. So it's like, why wouldn't you work with that company? Because we will go, well, I spent more money. And I mean, it's like, well, yeah, that makes sense. But your cost to acquire a client is an extra $140. So wouldn't you go with this company? It's like, well, yeah, don't worry about that though. It doesn't really matter. What matters is the increase in cost to close a client higher? Because the way I look at it is, it's like, well, if you close 5 with this person and you close 3 with this person and had half the leads, then it's like, if you double the leads and spend $1,600 and you close 6, right? 1,600 divided by 6 is still $266. Let's just say it was less and you close 1,600 divided by 5, you still are lower. You use 1,600 divided by 4, you are still lower. 1,600 divided by 3, you are now breaking even. So you would have to basically double your spend and make the same amount of sales in order for it to even make sense to be even. And that's all you have to do, is just look at how many sales did you make. People get so emotional. It's like, don't get emotional. Just look at the numbers. The numbers don't lie. If you make a decision based off numbers, you can be very confident. That's why we always tell our clients, they're like, well, why did you leave? Like, well, I didn't make enough sales. Like, okay, well, what were you making when you were going to other place? Well, I was spending this much. It's like, okay, well, if you spent less to get the same amount with us, or you got one more with them, but then you got less with us, what difference does it make? Because at the end of the day, it's about making money. Input in, input out. You spent less with us, you made more. Or you spent more with them, you made a little bit more. You spent less with us, you made 1 less. But you made 2 more and spent way more money. Which one should you go with? Well, I'd probably go with the one that makes the most sense, that gets me the lower cost to acquire a client. It's that simple. People are like, well, I closed more deals. Cool. Doesn't matter. How much did you spend? How much time did you spend is the next question. Because then we start talking about the quality of the leads, which leads me back to my next thing, is like, that's why people like mailers. They're willing to pay more to cost to acquire a client because it requires them less to have to go through. Now, what we didn't talk about is, in this analogy, this person had to work, 30 leads. This person had to work 50. So are those 20 leads worth the time? You got to ask yourself that. Is it worth me having a lower cost to acquire a client or a higher cost to acquire? These are the questions you have to ask instead of saying like, well, this lead sucks. Well, why does it suck? You don't even know the numbers. And I think mortgage is a perfect place because it has a complete comparison. Now you can say final expense, but I would even say that there, I think that's like a no brainer. I would rather do digital final expense than do in-person final expense. Why? You can recreate. See, the thing is, what you're trying to recreate for a mortgage protection mailer can be recreated digitally. It can. It has. That's the only reason I made it because I ran mortgage protection and I wanted to create a lead that was close to a mailer. That's why I sometimes call them digital mailers because it's meant to be like that. If it like the OTP, the quality, the questions, like you have to create leads or be around leads or work with leads that facilitate the cost to acquire client that you are looking for. That is the bottom line. Having more leads doesn't mean anything. It really doesn't. If the cost to get the person is still the same, you just have more leads to get to the same result. And that really is kind of like a waste of time. I'd rather have less leads, get to the same result, than get more leads and still get, it's like, it doesn't really make sense. So that's how you have to look at it across the board. If you can analyze that across the board, then, I mean, what are we really talking about? That's where the difference comes in, right? So I hope this video was pretty straightforward. I know I have my little rough it patch to figure it out. I think that the mailers would win in this situation if this is really the person's numbers. Now, I'm just based off what I heard this morning, right? Could we use a better analogy and say that the cost per lead is $100, right? So then you're only getting, 30 leads for $3,000. It's like, yeah. It's like, okay, so then you have to close 15 of them. So that's half of the total leads. And even that's like, you're going to get 30 leads. Everybody's not going to pick up. You have about 10, even with mailers that just don't pick up. So you have 20 leads to work. Even if you book 20 appointments, if you close half of them, even if you close a third of them, that's only 15, right? Depending on what you're closing the average annual premium at. Now, if you're closing at 1,500, 15 times 1,500 is, 22.5K. That's pretty nice. All right, but it's like, is that going to happen every time? Are you going to get those leads and close that many? That's 70, 80% closing rate. That's pretty high. Now, if you're doing it virtually, it's like cool, but a more realistic closing rate is like 50 to 60% across industry standard. So now you close 10 deals for $3K versus you put $55 into a digital mortgage lead and you get a little bit more leads. So basically you're getting, it's half the price. I mean, that's kind of drastic. So now instead of me getting 30 leads, I get about 60. And then if I'm still closing, let's say of those 60, now granted, it's not going to be, like the contact rate's not going to be nearly as high. But let's just say of those 60 people, right, that you book, just on a safe side, let's say 35. And then you still close half of 35. Right. So let's just say you have 35 and you close half of that. That's 17.5 times a 1.5 as a $1,500 lead. That's 26,000. See what I'm saying? And then it's digital, and it's like you don't have to wait 2 weeks, and it's like those numbers will fluctuate. It's like because that's saying that every week you're always going to get 30 leads at this thing. It's like yes, but no at the same time. Digital is a lot more streamlined, but it is more volatile, and it does require an immense more risk because. And skill on the front end. Like you do have to get really good at booking appointments. You probably do have to get good at one call closing or tying things down, or you will lose a lot of people. Once again, I'm not here to defend either or, because if you can go get a mortgage mailer that's honestly based on these numbers, if it's sub $80, I would go for mortgage every day of the week. Like if you can get a mailer for $70, I would do it. There's no reason why you wouldn't. That doesn't really make sense. That would be the absolute best bet that you could do. But you should focus on figuring out how you can do that. And then from there, right, you'll be able to close, but you have to figure out what your cost to acquire a client is. If you don't, it doesn't matter. That's why you should try both and see, test, figure out what works, and scale what works. Don't just go for what somebody else said. Figure out what works for you. I did a month of mailers. I dropped, 10 grand. I did a month of digital. I dropped 10 grand. Look at the numbers, figure out which one is better. That's how I'm learning how to do things. You just have to test, analyze numbers. Which one did better? See which one wins. Go with that. Scale it. Keep testing against it. Test against what they call it, the control. Right? Variable. Keep testing against it. And then eventually you'll run into the winner. So as always, please make sure that you like, comment, and subscribe. If you're an agent, And you're looking for high quality leads, go to leadlabcrm.com. We have lead options from $1 to $55. If you want to work with us, if you see our ads, you click on it. We're adding in some new things. You could do a lead request. I think we're adding in a lead request call. And then from there, we will also have the ability for you to go to our agentleadlab.com website. That is our main website for our agency owners. You can book an Apex call. Cost for that ranges anywhere between 5 to 10K a retainer, right? And then plus your ad spend. That's separate. You have to do that. If that's out of your budget, it doesn't make sense. Please don't book a call. Don't waste our time. I've already told you the price. The requirements are simple. 3 to 5 agents, issue paying $30,000 to $40,000 per month, agency doing $300,000 plus per month. Otherwise, it doesn't make sense. We're going to build your ads and we're going to build out your back-end CRM. We're going to link the two. If you already have a CRM, we'll discount the rate. It won't be there. It'll probably be $3,500 to $5,000, depending on the size of your agency. Not here to waste your time. If you do want to do that, you can hop on a call. All we ask is basically at that point, like if you're ready to move forward, cool. If you probably have a few more questions, otherwise just watch our content. There's nothing special. I'm not going to sit here and tell you. We're running your ads. We're building a Go High level. You're paying for us to work for you. That's simple. It's like you're hiring us. Don't look at it like there's some special saucy system that people are trying to sell you. They're not doing anything. Put you on the ads. You don't want to be on the ads. We do AI, or we can do standard. You can bring all of your agents in, flat rate, really simple. Like not here to sugarcoat anything, just here to tell you the God's honest truth. I don't want to waste your time. So please don't waste mine. I'm at the point where I take those calls as of right now, as we're scaling. Maybe I won't, but right now I take those calls. So please really don't waste my time. If you want leads, just go to the lead website, put a lead request in when you're ready to pay, not when you're like, oh, I'm just snooping around. There's nothing to see. The prices are on the site. All the information's on there. It tells you what type of lead it is, where it comes from, average conversion rate, everything that you really need to know to make an informed decision if we are the people you want to work with. If not, keep watching the content, keep watching people kill, keep watching people win and grow. And we look forward to seeing you in the future. As always, like, comment, subscribe. I'll see you guys next time. Peace.